Appreciation, Madam Simbi. The National Treasury will deliver the budget statement for 2024-2025 financial year on June 13th, 2024. According to the National Assembly Budget and Appropriations Committee Chairperson Ndindi Nyoro, the government projects a 4.25 trillion shillings budget for the 2024-2025 fiscal year, an increase from 3.6 trillion in the previous financial year. The government's 2024-2025 expenditure plan shall be shared between ministries, departments and agencies, including allocations for county governments. Bushebi Jr. brings us the breakdown of 2024 financial bill.
Even as Kenyans grapple with high taxation as a result of 2023 Finance Act, the legislative process for the next fiscal year's budget, which began on Tuesday, will raise the cost of crucial goods and services significantly for both individuals and businesses, as a Ruto-led government targets collecting 2.95 trillion shillings in taxes, up from the 2023-2024 2.62 trillion shillings revenue collection target.
So we are saying this is crazy. We can't have a finance bill like this. Haiwezekani. Hakuna Mkenya anaweza kuafford.
According to the 2024 budget policy statement, President Ruto proposes a raft of new tax measures and introduces fresh powers for Kenya Revenue Authority that are bound to be controversial in a bid to boost tax revenues. The state aims to boost revenue collection to over 20% of the GDP in the next fiscal year. The government plans to remove VAT exemptions from some critical banking services. The bill also maintains excise duty on multiple financial and telecom services at 15% for money transfer services, telephone, data, and 12.5% for betting and gaming. It also maintains 20% excise duty on fees charged by digital lenders and introduces a similar rate for fees charged by banks. Among the VAT exemptions on financial services the bill seeks to remove include the issuing of credit and debit cards, money transfer services, foreign exchange transactions, check processes, issuance of securities, and assignment of debt. In the new bill, motorists were targeted in the new wave of tax reforms after the Treasury proposed the motor vehicle tax. This is the amount a motorist pays at the time of acquiring insurance cover. Car owners could be taxed as low as 5,000 Kenyan shillings for the service and a maximum of 100,000 Kenyan shillings depending on the car's value.
But I think a robust conversation we need to have is on motor circulation tax. And we welcome members of the public on their views about this. So the import of course is not just to generate revenue, but also take care of remissions.
The tax rate was set at 2.5% of the vehicle's value, which will be determined by the engine capacity, model, and year of manufacturing. Ambulances, vehicle driven by government officials and diplomatic personnel, will be exempted from these charges. Another tax is referred to as minimum top-up tax. This tax bracket is reserved for multinational firms with a gross or consolidated turnover of 106 billion Kenyan shillings. The amount will be calculated at 15% of net income minus an actual tax rate multiplied by excess profit. Several public entities will, however, be exempted from paying the taxes. Still on the bill is a tax only referred to as economic presence tax. This will be a tax payable by a non-resident whose income is derived from a business carried out on a digital marketplace. According to the bill, a digital marketplace means an online platform that enables a person to sell or provide goods, property, or services, including ride-hailing services, food delivery services, freelance services, professional services, rental services, and task-based services, among others. Those supposed to pay the tax shall be required to pay 20% of the gross turnover. The business owners shall submit the returns before the 20th day of the month.
As we have a robust conversation about what we are being taxed, please check on the budget where that money is going to and have your voice heard. So while you feel that that money is going to waste, please go and have your views be heard. So that at the end of the day, we must balance the budget. You cannot pass the budget like this and without financing it. So we have to do that balancing act. So
the 2024 finance bill also proposes a withholding tax, a new tax on goods supplied to public entities at a 3% rate for residents and 5% rate for non-residents. Withholding tax is income tax paid to government by the payer of the income rather than by the recipient of the income. It is deducted at source. The tax provision will also include those making online payments.
I want to assure the Kenyan people in the entire process of making the finance bill to become a finance act, all Kenyans' voices will be heard. And I want to assure the Kenyan people, this government is not hell-bent on overtaxing Kenyans.
Bora tujenge Kenya hii, watu wapate manyumba, tuwe na affordable, tuwe na universal health coverage, watoto vijana wetu wapate ajira. Zakaya ni jina, tuendelee mbele.
From July 2024, if the bill passes through, digital content creators will pay a tax known as digital content tax. This will involve digital content creators submitting a percentage of their earnings in tax. Treasury is seeking a 20% tax for those operating digital platforms or monetizing digital content for non-residents and 5% for residents. The bracket for online services was expanded to include ride-hailing services, food delivery services, freelance services, professional services, rental services, and task-based services. Among the most controversial charges are a removal of VAT exemptions on bread, which the president later retrieved, and the introduction of a 2.5% annual tax on the value of cars, which will be bundled with insurance covers.
The finance bill 2024 as currently crafted is not a document that can be said to be helpful to Kenyans and the economy generally.
The finance bill that will be coming soon is going to hurt Kenyans economically, and the income, the surprising thing is that the income is constant. So you cannot increase the expenses of Kenyans without increasing their income. If you would have increased people's income, it would be better.
The law will also replace the current flat tax rate for imported motorcycles beyond a certain price with a 10% of value tax.
Kiangalia hivi sasa wameongeza kila mahali, hata usafiri. Hii tunaita kama kitega uchumi cha wale mahustlers, pikipiki pia zimeenda juu.
There has been a lot of tax expenditures around exemptions. So the bill proposes to move very many items that were previously zero rated to tax exempt, and this will save, we spend around 293 billion shillings every year on tax expenditure, and now the impact assessment of this is that this is not necessarily transferred to the value of the consumers, and so that is why there is a raft of proposals now to delete all this from zero rate and now make them exempt.
The new law proposes to give the taxman powers to demand that taxpayers integrate e-teams into their invoicing process or risk up to 2 million Kenyan shillings in penalties for non-compliance. Given the slow uptake of the system by SMEs, this particular proposal seems aimed at both pushing for compliance by small businesses. Controversially, the bill also grants KRA certain exemptions to data protection laws. If passed, it would amend the law to allow disclosure where quote and unquote necessary for the assessment, enforcement or collection of any tax. In addition to data protection concerns, the eTIM system, for example, has been an issue for the medical profession where services carry a high expectation of privacy.
The Finance Committee will go around the country and they will seek views of Kenyans. And I know as Parliament, they will respect the views, as Parliament will respect the views of Kenyans. So Kenyans to be patient, let the bill come to the House, we'll debate it, and even before debate, it will have gone to public participation.
What we are not explaining to people as members of the fourth estate is that these are proposals. We should be asking what is the overarching concept that would be informing these proposals. For example, for alcohol, there is a big drive in the budget 2024-2025 to relook at the taxes that are imposed on alcoholic drinks.
For Maisha Prime, Maisha Television, I'm Bushebi Jr.